Everyone, I'm just taking a look at the state of the trend in the dollar index. So we have this downward trend line. This is a daily chart, by the way. Downward trend line that held for most of the descent on the way down. And it looked like it just recently pinned this level at 11,517. So you have a higher low again, a higher low again. And then you have what looks like to be an energetic rise out of the April 17th level, which was 11,586. So you have the distance between these 2 points, which is 11,589 more or less, up here, which is 123. That's a big movement for the dollar index. So of course there's overhead resistance, and there could be some time until the dollar bumps around before breaking 11,750. But that would be the nature of the logic behind what we expect so far. As far as the euro and dollar, their relationship, let's take a look at the inverse of this, which would be the euro dollar. So I have here these two horizontal lines to show where I think the buyers were. So in the case here, this is very relevant because it's January 19th of this year. It was a launching pad for what was a 305 more or less advance in the euro dollar. So we have, since the most recent peak here on March 27th, excuse me, 202 point drop on the way down. So if you measure the move between the close of the day on Friday to where I drew these, where I expect some of the buyers to come in at 122, it's 87 points. So what I expect for Sunday is for the euro dollar to begin to just drift higher a little bit before going back down. So a lot of that could be news driven. And if you compare the two, we take a look at the euro against the pound. So this drop in the pound against the dollar is much more dramatic because it did go higher up until this point, which was in the 143.60s. So it has a different type of top because it's not really as rectangular. But this action is definitely bearish, and it definitely shows some more of a degree of a reversal because you have 418 pips on the slide, and these trends just tend to continue. So we're looking at the speed, rate of momentum, the range heights to see that this type of action can continue at the same speed, the same rate, velocity, whatever you want to call it. And I expect the buyers to start to come in here. Take a look at where this pin is right here. You have a little bit of a hammer type of bullish reversal candle, and it came in at 137,744. So that leaves a good amount of time between the close of business Friday until this low here, which is another 340 points. It's not guaranteed, but it looks like the probability is on the path of least resistance going back down. So here we have the Aussie dollar. I didn't time this correctly because I did get into a long trade. I wanted to balance out a short that I had in the euro dollar, but it's okay. It was just a small loss. So if you take a look at my entry, it was right here at that point, and I did make up for the losses in the short that I had in euro dollar. There's only 67 pips, so I didn't have that much at risk, and I do expect some demand to come in. You can already see that price has bounced out of this area right here at 766.14. This is also a half, which is 76.50, right? So prices can drift around the half before trying to make an attempt to go back up to 78, or at least half of 78. So the motive could be to come back into the middle of the range. You have the high here and the low of the range for a day trade, probably to come back up to the middle of the range. So this is the dollar against the yen. It's a very long inverse head and shoulders bottoming out pattern, and I expect it to go to 108 on the upside. If it does fail, which there is some degree of a flame out here, April 13th, and the highs were. Let's take a look at the highs for this part of the day. The highs were put in with some authority, but then again, we're still making up our mind what we're going to do. That if it is a long-term bullish reversal, we'll start to see 108 in the bag, and then probably a rally higher to some of the levels within 100 or 200 points. So if it does go up to 108, then we'll start looking at profit targets at 109, 110, etc. So we'll just see, like for example, if you compare the bullish moves, see this is how I would sell it. Right there, you have that red rectangle. Back when we were trading in December and January, I definitely nailed that one. Not to brag or anything. So 226 have a rally right there, and if it's that kind of sequence, then it would be a rally from trough to peak of another 203 pips. That's definitely possible. So 108 is realizable, and so is 109, 110. So depends on what they do as far as announcements between the U.S. government and Japan. So this is a challenge I have because I haven't been able to let go of any type of short position that I had in the dollar CAD. So essentially, I was long of the dollar, short of the Canadian dollar, and it's starting to get close to working out. But I have a net loss based on my entries of 192 pips. So you have the first three trades were total losers, except for this one right here, which is something that I entered on 420. So I did expect for these buyers in this support point to actually work, and they did. But I didn't get most of my entries down here. So it would have been a lot more favorable for me to start to buy right in there. But that wasn't the case. It's okay. We have to learn from our mistakes. And that is what I have for you. Good luck trading, everybody. And enjoy this upcoming Sunday and Monday trading sessions.